Time now for the top picks from Paul Thornton, president of Investor Bootcamp Online. Top pick number one is a company I've never heard of before. Gafisa?
Yeah. Never heard of a Brazilian home builder?
No.
No. Great stock in the last bull market. Very high growth company. Earnings were up, I think it was about 350% roughly in the last quarter. Massive increase in sales. That is one of your emerging market plays, and this is a home builder that was building houses in the $30,000 to $50,000 range, and I believe they've upped it now to about the $70,000 to $75,000 range. There's a lot of people in Brazil, and this is your premier home builder out of Brazil. So here's a very high growth company, and clearly home builders are not the play in the U.S. anymore. This has been a great stock, and it is I think, an excellent choice over the long term here in the next 3, 4, 5 years.
Let's come back to Canada, talk about gold stocks. IAMGOLD is your top pick in the space.
Very strong sector. That breakout in September in gold stocks was extraordinarily powerful. There was a huge amount of buying from the pension funds and the hedge funds and the mutual funds, and it's undergone another round of running higher in the last 2 or 3 weeks. So here's a sector that looks extraordinarily strong right now, and when you've got that kind of sector power, go with it.
It's also moved into overbought territory. The herd likes this one as well. Does that mean that the run is almost done?
Well, it's made a big move here recently. I wouldn't jump in here on Monday just because we happen to randomly be talking about it on Friday the 13th. Look for a better entry point. Gold stocks are volatile. I like the idea of buying them on pullbacks.
And it's at $19.40 today. The 50-day moving average is $15, but it did see some intermediate support there at $17.05.
Yeah, and even 16 to 16.5 would be good.
Neo Material Technologies, top pick number 3. Magnets and things of that nature?
So this is a smaller company. It's going to be more volatile. And again, watch this one when the market goes into a correction. But here's a company that makes precision magnetic products out of rare earth materials like zirconium. And you can see the stock's had a tremendous run. And here it made a nice little base with a quick little sell-off and then a recovery. And then away it goes again. And the uptrend is back away. In fact, it had a pretty nice gain today, over 10% at one point.
I wonder if this makes this spot here an intermediate support level in the event there is a correction, which is at the $4.03 mark.
And that's the area where you'd like to buy it ideally on a pullback.
Okay, and you are anticipating a pullback.
There is always pullbacks in the market. You may not get it to that level, but if it consolidates somewhere around here or even higher, that would be your next opportunity to buy in.
We never spoke about bonds.
Yeah, and the reason I want to talk about bonds is that the bond market this year, and a lot of people are confused here about central bank rates. Mid and long-term bond rates have run substantially higher this year, which means bond prices have plummeted. And it looks like it may be starting again. So if we see a continuation of rising interest rates, investors in bonds and bond funds need to be aware they could suffer a significant amount of loss on their capital.
For those who are invested in mid to long-term bonds.
Right. So some bond funds are concentrated in that area.
The 10 to 30 year.
10 to 30 year, and you've got something like the XLB, which is a long-term bond maturity ETF, trades in Toronto. That would be a good one to use. The U.S. is clearly broken down. It hasn't yet in Canada.
Paul, great having you with us. Thank you.
Thank you.
Paul Thornton, president of Investor Bootcamp Online. If you missed any part of the program, bnn.ca for the replay later today. As always, please consult a qualified financial advisor before making any investment decisions. I'm Michael Hainsworth. Thanks for joining us. Hope to have you with us on the next program.